Welcome everybody to Sunday School with your boy Buck Bandit P. Man, I'm so excited y'all here with me today. I'm so excited all y'all been tapping in with me. I'm so excited about the year we about to have. I'm just excited. I'm just excited. Can't you tell I'm excited? Man, but listen, man, thank y'all for being here. You already know what it is, man. Make sure y'all definitely tuning in to the Buck Bandit podcast. We go live on my Instagram, only on the Buck Bandit P Instagram every Monday at 7 p.m. So make sure y'all tapping in and make sure y'all definitely checking out the Buck Bandit podcast live on IG every day, every Monday at 7 p.m. But also make sure y'all tuning into the YouTube channel, man. Make sure y'all subscribe to the YouTube channel because we got some fire coming for you. When I say fire, definitely make sure y'all subscribe to this channel for sure. Because if you want to get some money this year, this definitely where you want to be at because we're going to definitely make some money this year, even though the market might not look crazy. It might not look like it's a good year for the market. We going to make some money in the market. But yeah, once again, thank all y'all for being here. Make sure y'all follow your boy on all the socials and all that for more tips and stuff that I might not post on YouTube. But anyway, today's subject, the topic, the theme of the week is compound interest, man. If you've been tapping in with me, you've seen the video I dropped about Mr. Earl, who was making $12 an hour and ended up with $500,000. That story was crazy. So if y'all ain't tapped in, make sure y'all definitely go tap into the IG and make sure y'all check out the YouTube channel to see all the videos that I'll be dropping because listen, man, it is some heat coming for y'all. But yeah, man, Mr. Earl, man, he started with $12 an hour and turned it into $500,000 invested in the mutual funds and individual stocks. He just kept his head down. I think he was a parking lot attendant or something, like something crazy. So when people say, oh no, I don't got enough money to invest, it's like, no, you just don't got the knowledge. That's all it is. Like when people tell me they don't got enough money to invest, I just know they don't got the knowledge. So that's why we're here. So we're going to talk about compound interest and why not having enough money to invest is not an excuse anymore, especially if you tapped in with me. So number one, let's talk about it. What is compound interest? Like most people don't even know what compound interest is. So let's break that down. Well, a lot of people know what interest is because we get charged interest on our credit cards, we get charged interest on our cars, interest on the house we buy. We get charged interest for a lot of stuff, a lot of debt we take out. We're going to definitely pay interest. So compound interest is just compounded interest. It's simple. So you got to break it down. If interest is money that's on top of money, compound interest is money on top of money on top of that money. You know what I mean? So let's break it down in the simple terms where everybody can understand it and we can talk. Like I don't want to be talking over people here because that's one thing I hated about this stock stuff. When I wanted to get into it and learn, everybody was talking about all this stuff and I didn't understand what they were saying. So compound interest is your money that make money on top of that money, which basically means if you have money and your money has babies, those money babies made some more money babies. That basically explains compound interest. It's sort of like think of a snowball. You know how when a snowball riding and then it just get bigger and bigger and bigger, like you don't gotta add no more to it. It just gains more as it rolls. You see what I'm saying? So that's all basically compound interest is. That's all it is. Money on top of money on top of that money. Yeah, that's how much money we gonna be getting. So tap in. But so let's break this down into small increments. And shout out to Dr. Boyce Watkins for this one, man. Make sure y'all tuned into Dr. Boyce Watkins, everything he doing over there with the Black Business School and all that, because I got this concept from him, and it's a prime example of how I don't have enough money is not an excuse anymore. Dr. Boyce Watkins came up with this thing. I don't know if he came up with it, but he coined it, called it the $5 a day plan. And every time I think of it, I think of him. So shout out to Dr. Boyce for that. It's $5 a day. Basically saying if you invest $5 every day for the next 20 years, 30, 40 years, how much money you have would be crazy compared to the initial investment that you put in. Okay, all right, so let's break it down like into something people can see. Y'all see this graphic I put up right here, right? You see Ben and Joey, right? Ben, he started investing at 21. You see Joey, he started investing at 30. And the difference in what they ended up with at the age of retirement is $1 million difference just because Ben started investing early. So right here on this graphic, it says Ben started investing at 21, but he stopped investing at 30. He started investing at 21 and stopped investing at 30. So he only invested for 9 years. And the rest of that money just compounded. It compounded because you once you put your money in, the whole thing is don't take it out, and it's going to gain interest, and that money is going to gain interest, and then that money is going to gain interest, and it's a snowball effect. And see here, it says Joey, he started investing at 30 and invested all the way up until retirement, and still came $1 million short of Ben because Ben started investing early. That, my friends, is the power of compound interest. That's why starting early matters. That's why once you get in this game and you actually start making money and you start seeing it go by year after year, the number one regret is I should have started earlier. Because it don't matter how much you start with. Like, think about if our parents, when we got jobs, like when they took money and made us pay rent and do all that dumb stuff, what if they knew about custodial accounts and they was just putting that money in a custodial account for us? They could have invested from 16 to 30 and we ain't never had to invest again, and we'd probably be sitting, not even probably, we'd be sitting on about 6 figures right now, easily. You see what I'm saying? But we could take this lesson and we could do it for our kids, or we could do it for ourselves, because if you plan on living another 15, 20 years, you see what I'm saying? So compound interest is the key. Money will never equate to how much time can multiply your money. So even if you start late and you put double in what somebody could have put a quarter in what you put in from 30 to retirement, but they've been putting that quarter% in for 10 years already. So you already behind the eight ball. They already been compounded 10 years in the market. You see what I mean? So that's why time in the market is the best thing you could do. The best time to start was yesterday. The next time to start is right now. Go open up that stock account. Because the next thing and the last thing I'm going to talk about before I get out of here, man, is opportunity cost, man. Opportunity cost is such a real thing, because if you not understanding that $5 a day can turn into 6 figures in 20, 30 years, then you'll just say, oh, it's just $5. I'm not gonna miss it. Like, I'm not, who cares? It's just, ain't nobody going, how I'm gonna be broke over $5 a day. That's because you don't understand compound interest. And I didn't understand that before neither. And once I understood that, that's when y'all gotta go check out my other video when I said, take a budget, like make a budget. Like, you need to see where you at, see what's coming in, see what's going out, and then you gotta make a budget. Because once you budget and you can see where all your money going at, you're gonna realize how much money you wasted. And that is opportunity cost. Please do not rob your future self with receipts. Don't do it. You don't want to rob yourself with future receipts. Like, I'm gonna show this last graph, then we're gonna get out of here, man. Like, you see investor one started at 25, set aside 5,000 a year for 10 years in a row. No more investments after 34. So from 25 to 34, 9 years of investing. Like, I want y'all to get this concept so good, man, because I wish I once I got I wish I would have started sooner, but I'm just getting my kids on it now. So by the time they my age, they won't have to worry about not having 6 figures. They can have 6 figures, and then we're gonna go in how you can borrow against it, you can get margin and still keep your assets in place. Like, listen, please tap in with me, man, because as I'm learning, it's like, yo, it's so much stuff that we don't know and we've been lied to. I gotta give y'all the game. So, and you see investor two right here, started at 35, invest 5,000 a year for 30 years in a row until 65. So they invested for 30 years. And like, physically and put money in the market for 30 years Investor one just invested for 9 years and then was like, yo, I'm gonna stop investing and just let it compound. And the difference is it's amazing. The difference is amazing. Even with that money, you will not catch up to the time. And that's one thing wealthy people understand. Wealthy people understand I'm not getting this money to buy things, I'm getting this money to buy time. That is the key to most wealthy people. They are buying time. So let's go over it again, man. What is compound interest? Compound interest ain't nothing but your money making money on top of your money. Money babies having money babies and having some more money babies. You got money grandbabies running around here. That's basically what compound interest is. It's a snowball effect. Once you put it in, once it accumulates enough, all they got to do is keep rolling down the hill. You don't even got to add nothing else to it. That's why time always wins. And opportunity cost, man. Shout out to Dr. Boyce once again for the $5 a day plan. Because if you could just put $5 a day away for your kids, think about how they're gonna be when they 20 years from now. They could be five, you might be late. You know what I mean? They could be 5, 10. Just start doing it now. By the time they 30, trust me, they're gonna thank you. And then let's talk about how compound interest rewards patience. It rewards patience and it punishes procrastination. I'm going to say that again. Compound interest rewards patience and punishes procrastination. So, no excuses. I don't got no money to start. No, start now because the sooner you start, the more time you have for your investments to mature. And the earlier you start, man, the less you have to do. And the later you start, the more you got to do. You're still not going to catch up to somebody who started earlier. That's the sad truth, man. So thank y'all for tapping in with your boy Buck Bandit P, man, on this Sunday school edition, man, talking about compound interest, man. I got something coming up for y'all next week. Just make sure y'all following your boy on IG and all the other social medias. Make sure you subscribe to the YouTube channel. Make sure you like, comment, share, and subscribe. You already know, man. Like, I'm just so excited about this year. So excited to tell y'all all these tips and all this stuff I've been learning, man. So just make sure y'all stay tapped in and let's get this money.